There's some huge news with SCHD and SCHG and a bunch of other Schwab accounts, and I'm going to give you all the news right now. This just happened within the last couple of hours, and I was actually teaching at my university, and I saw this and I knew I had to make a video so that you're informed right away. The price, the individual price of the ETF will be going down, but that's not necessarily a bad thing. It actually won't be a bad thing for you, but let me show you exactly what's happening and so that you understand everything. The first thing that was announced is that the SCHD dividend is at 75 cents. This was declared for September 25th, so if you own SCHD as of September 25th, the ex-dividend date, then you will have a new dividend on September 30th. So that's important to know. As of right now, the dividend rate is about $2.83 per share per year, and the yield is about 3.33%. So that's the first piece of news for SCHD, but not necessarily what you came here for. So let's talk about this big news across Charles Schwab of what they just announced. So Schwab Asset Management announces ETF share splits. Remember a little while ago when Nvidia and Broadcom and Chipotle all had stock splits, something 50 for 1, 10 for 1, things like that happened, and then the stock market went kind of crazy for those stocks? Well, Schwab is doing the exact same thing, but for ETFs. And this doesn't happen often, but it's very interesting and it's something that you definitely want to know because it's going to be a big deal for your investing, especially those of you that have a heavy amount of SCHD or SCHG like I do. Schwab Asset Management, the asset management arm of the Charles Schwab Corporation, today announced forward share splits on 20 Schwab ETFs. Forward ETF share splits increase the number of shares outstanding and decrease the net asset value per share. The share splits will not change the total value of a shareholder's investment. The ETF share splits will apply to shareholders of record as of the close of U.S. markets on October 9th, 2024, payable after the close of the markets on October 10th, 2024. Shares will begin trading at their post-split price on October 11, 2024. So basically, this is saying that they are planning right at the beginning of October to do a share split, but for ETFs. So let's look at what the new share split's going to be, and so that you have an idea of how much each of yours are going to be worth. Then I'm going to explain what this actually means and what it means for you as an investor and what to do moving forward and how I'm investing for the rest of 2024. So the first one here is SCHG, which is the Schwab US Large Cap Growth ETF. It looks like it's doing a 4-for-1 stock split. If we look at SCHG, we want to remember that this is the Large Cap Growth ETF. It's basically tracking the total return of the Dow Jones US Large Cap Growth Total Stock Market Index. It's been doing really, really well, obviously. The 10-year on average is 16% per year. In the last 5 years, over 20%. So this is just an amazing, amazing fund. And as of right now, it's at about $104 or so. So if they're going to be splitting this one 4-for-1, you can expect this one to be about $25 or $26 per share. If you were to open up your account on October 11th and see that it went down from 104 down to 26, you'd probably be freaking out. So this is good for you to understand up front. Looking at the next one, SCHD. As of right now, it's $85 or so, and they're doing a 3-for-1 stock split. Remember that SCHD is the Schwab US Dividend Equity ETF. It's tracking the total return of the Dow Jones US Dividend 100 Index. This one's been super, super solid as well. If we look at the portfolio here, it's got Home Depot, Verizon, some Pfizer, some Chevron. And as far as the performance, it's also been doing pretty well at 11.5% on average per year and over 13% over the last 5 years. It also has that dividend of around 3.5%, or right now we just learned 3.3%, so that's pretty solid as well. So they're saying that it's going to be a 3-for-1, and so since this one's at around $85 or so, you're looking at per share about $27, $28. Now, when they say 3-for-1 or 10-for-1 or 50-for-1 or whatever, yes, that's going to be bringing down the entire price of buying one share of the ETF. But for those of you that already hold the ETF, if you own one share and it's worth $100, and they say we're going to do a 2-for-1 stock split, basically now you own 2 shares and they're each worth 50. So before you owned 1 share and it was worth $100. Now you own 2 shares, they're each worth 50, so you still have $100. If you look here, if we're doing a 2-for-1 stock split, pre-split, the number of shares you have 10 million, the share's price is $10, the market cap, or how much there is 100 million. If they do a stock split now, 2-for-1, instead of you owning 10 million, you now own 20 million, but they're only worth $5. 5 times 20 is still 100, so it's still the same. And you can see the same here, like a 3-for-1. If it was 10 million before, that times 3 is 30 million, or down below. So if you have a $10 share price and there's 10 million of them, now you have 30 million of them and it's 333. Still comes out to the same value there. The reason for stock splits come out to psychology for the most part. Some investors may feel that the price is too high for them to buy as the price of the stock gets higher and higher, but small investors might feel that it's unaffordable. Splitting the stock brings the share price down to a more attractive level. The actual value of the company doesn't change, but the lower stock price may affect the way the stock is perceived, and this can entice new investors. You can look at the stock split pros and cons as well. As far as pros, lower share price make it more attractive for small investors. More shares in the market can lead to increased liquidity. Another pro could be that it can boost investor sentiment and confidence, can also signal management's confidence in the company's future performance, and it can make employee stock options more attractive. Now, obviously, most of that is talking about company stock split, not necessarily an ETF, but we still want to hold this the same. And let's look at the cons real quick, and then I'm going to explain exactly what to do with this now that the prices are going down, and share with you the rest of the Schwab stock splits. The cons for stock splits may create a misleading perception of increased value or growth, can cause short-term volatility in stock prices, it doesn't improve the company's actual valuation or financial health, and although the total earnings remain the same, earnings per share gets diluted, which can be perceived negatively. So let's look at the rest of these Schwab accounts that they've announced, and then I'm going to talk about exactly what I'm going to do as far as investing and what this kind of means and what I can see, at least in the short term, but then definitely long term for the ones that I love most, which is SCHD and SCHG. SCHM is a US mid-cap ETF. That one's going for a 3-for-1. The Schwab US Large Cap Value is another 3-for-1. We have the Fundamental US Large Cap, FNDX, 3-for-1. The Fundamental US Broad Market, a lot of you like that one, which is the 3-for-1 as well. We're looking at SCHX, which is a great large cap ETF. That's doing another 3-for-1. The Broad Market ETF is doing a 3-for-1. Then we're looking at the small caps, so the Schwab Fundamental US Small Company ETF, 2-for-1. That one will cut it down to about $30 or so. The Schwab 1000 Index, 2-for-1 as well, maybe $28, $29. The Schwab US TIPS, TIPS ETF, 2-for-1. The High Yield Bonds, 2-for-1. Municipal Bond, 2-for-1. SCHA, which is an ETF that I did a video on recently. This is a really good one, going 2-for-1 as well. We have SCHR 2-for-1, SCHJ, SCHO, SCHZ, SCHI, and SCHF all doing a 2-for-1 split. So what they're trying to do here is they're trying to make it so that it seems like if you buy Schwab accounts, if you buy Schwab ETFs, it's going to be much easier for you to place this within your portfolio, especially for the investors that are working with a little bit less money. This doesn't mean that people that have a lot of money aren't going to be investing in this. I know a lot of very rich people that love Schwab accounts, but what I do know is that some people pick VOO, V-O-O, to invest in the S&P 500 and are totally fine with it. But that's running at a little over $500 a share. So if all you have is $400, and you can't buy a fractional share, then you have to wait a month, 2 months before you can even buy the full share because all you have is 400 this month. And then if you get another 400 next month, now you have 800, but you can buy 1 share, then you still have $300 sitting on the side. Whereas some people would rather invest in something like SPLG, which is the same thing. It's investing in the S&P 500 the exact same way. It's just that it's a smaller piece, and that one's only about $60 or so per share. So if you have that $400, you can buy a bunch of shares with that $400 and not have to wait as long in between buying. Same thing's happening here. Some people think that anywhere near $100 or so per share is kind of expensive per share, and so if we can get it down in the 20s or 30s, people can buy this more often, and maybe they're going to choose those ETFs over other ETFs. So what this is going to do, in my opinion, is I think it's going to make money flow in, at least for a couple of different reasons. Number one is that dividend is going to be very attractive, especially at how low the price is to get into it. People that are going to be looking to invest in dividend-style ETFs or dividend-style funds are definitely going to be looking at SCHD because it's technically the cheapest as far as individual price is concerned, and it's one that pays a pretty solid dividend at that price. The other thing that's going to happen is that we're going to get a lot of marketing, a lot of promotion from this specifically. There's going to be a lot of YouTubers, a lot of bloggers kind of doing what I'm doing right now, which is explaining why this is still solid funds, but that they're a lot cheaper than buying something else. So the alternatives might be a little more expensive, and people might just pick these just because they're down in price. As far as those of you that are already invested in SCHD and SCHG, I just think that this is a good thing. I think this is a positive. I would definitely not do anything different with your investing. I'm not doing anything different with my investing. I'm just excited that this is on the table now and that this is an option. The cool thing though is that now if you have 1,000 shares of SCHD, now you're gonna have 3,000 shares. And if you have 1,000 shares of SCHG, you're now gonna have 4,000. That's just kind of cool to have a whole bunch of shares. When we're investing and investing long term, we definitely want to be looking at the horizon 5, 10, 15, 20 years from now and not worried too much about day to day. Like today, SCHD was down about 1%, and a couple people reached out to me and just were a little bit worried about that investment. And I understand that, but what I'm trying to get you guys to do is stop looking at it day to day and look at it more like month to month or even year to year. Even looking at it that way is still tough, but if you really zoom out and look at it in 3-year, 5-year increments, you're gonna be happy. And overall, since you're invested in a broad market ETF, I believe that it's only gonna keep going up. There will be some bad years, but overall, they're going to be better years. Check out these videos to keep you going strong in your investing, and keep investing simplified.